Petrol and diesel prices rose today for the 9th straight day. Since May 14, petrol prices in Delhi have risen by 2 rupees 7 paise per litre to nearly 77 rupees in all of just 7 days. It is much worse in Mumbai, with a litre of petrol costing almost 85 rupees per litre. The other metros have seen a similar fate, as shown by this chart that you can see. Diesel prices have also faced a similar fate. Prices in Mumbai have risen by 2 rupees 4 paise in the last week. Chennai is a little worse off, as you can see from the timetable. Well, before I welcome my guests, let me place before you all the ingredients that go into making this 77 rupees that, say, a Delhiite pays for petrol. Yes, crude prices have risen from what we thought when the budget was made at $65 to $80 today. But look at how the taxes have increased. If you looked at in 2014, when crude was around $100, the central government's excise duty was 9 rupees 60 paise per litre. Today it is 19 rupees 48 paise per litre. In 2014, Delhi state VAT was 12.7%. Today it is 27%. Look at the table. Dealer commissions in 2014 were 1 rupee 79 paise per litre. Today it is 3 rupees 62 paise per litre. And finally, oil marketing companies are making about 3 rupees per litre on petrol and about 2 rupees per litre on diesel. This has probably slipped a bit because they did not raise prices during the Karnataka election, but it is still much higher than the few paise they were making in 2014 and the negative margins they were making during the UPA regime. So who should bear the burden? The centre, the states, the oil companies, the dealers, or the consumer? That's the question we're asking. And joining us in the special discussion, Dr. Kirit Parikh, Chairman, Integrated Research and Action for Development, by far the person most informed on petroleum deregulation; Vikas Halan, Senior President at Moody's Investors Service; former Oil Secretary Saurabh Chandra; Radhika Rao, the Economist and Vice President at DBS; and of course, in a bit, we are hoping that we will have one of the state finance ministers joining us. But first, to you, Dr. Parikh, since you have been there, done that, how should the burden be shared now?
Well, I believe that the government should cut down the taxes, and certainly excise duty can be cut down. And I feel that the states have even more of a responsibility to cut down their VAT, because VAT that states impose is a ad valorem tax, and therefore whenever the cost of diesel goes up, their incomes go up. So state can easily cut down the VAT rates without affecting their revenue from this, and maybe save 2-3 rupees on the price of diesel and petrol. So that clearly is the one very obvious point. But I feel that the government should also cut down the tax. There is really no reason for the government to have become so dependent on the revenue from excise on petrol and diesel, because this is really a country which is importing 75% of its oil products are based on imported crude, cannot be so dependent on the international markets for its fiscal stability. So long ago the government should have taken steps to diversify its sources of income, which they have not taken, but now it is time to do so. I think it would be a mistake to pass this burden on oil companies, because that is essentially just passing a book entry account. The public sector oil companies, their profits, etc., really accrue in the end to the state, and the impact on the macroeconomic of the country, the inflation and the stability and the growth rate would be no different, only marginally for a month or two here or there, but otherwise there will be no different if the government were to cut down the cost. And I think imposing the burden on oil marketing companies would be the wrong thing. It would give a wrong signal, and we should really take other measures to improve efficiency in the system.
Well, first, sir, let me just let's keep this table on and tell you what Dr. Parikh is telling us. See, in 2013 or 14, what the Delhi government was charging was 12.7%. No, not this one. Let's get the previous table again. What the Delhi government was charging was 12.7% of 108 barrels of 76 rupees a litre. Today it is charging 27 rupees of a higher price of petrol and diesel. So actually the state governments are making more money than they were making when crude was $65. It was at that time 27% of $65. Now it is 27% of $80. So actually state governments are earning more and they can easily pass off a few rupees to the consumer. Well, let me get Mr. Saurabh Chandra in. Mr. Chandra, would you agree with what Dr. Parekh is saying, that the government should bear, because it had no business, absorbing all the gains from lower oil prices? The excise duty is clearly stiff. It used to be 3 rupees and now it is 15.33 rupees per litre. It's the centre's duty. What would you say?
Let me start with the factual submission. The petrol and diesel prices are linked to product prices. The difference between product prices and crude price is crack.
Yes.
And the crack is not always constant. The crack also varies.
Okay.
But having said that, what are the options open before the government? The most talked about option is to bring it under GST. For me, that's a non-starter, because if that was to be done, then either the rate structure will have to be changed, you'll need a new rate of about 70-odd%, or both the state and the central government would take a big hit on the fiscals. So with GST being ruled out, the second option is to bring it back under regulation, which would once again impose an impossible cost on the budget. Now, there is this famous footballer's dilemma. So the government has to be seen to be acting, and the easiest way for it to act is to central government to reduce excise by a rupee or two and prevail upon the state governments to cut down the VAT rate.
But isn't that possible, Mr. Chandra?
The most feasible
Mr. Chandra,
option.
Exactly. Both of them have been making more money. One on the pretext that we should not allow the volatility of prices to hit the consumer, and therefore when prices went very low, I increased the taxes. Now that the prices have risen globally, is it not the duty of the central government to give back a bit? Then it has the moral authority to tell the states. Should not that be the course of action?
My reading of the situation is perhaps a decision would be taken in the near future to reduce excise by a rupee or two. But unless the states also join in, it's not going to make too much of a difference to a price which is already at 76 rupees. So a 4 rupee cut or a 3 rupee cut is what the consumer can look at. But what should also be kept in mind is that the prices of kerosene and LPG have gone up.
Yes.
And there will be an increase in the subsidy burden on the government of India.
Yeah.
Now, how will that be funded?
That's true. I take your point on that. I think the LPG subsidy is some 20,000 crores thereabouts. So that and especially because this government has made it a point to ensure that LPG cooking gas connections are available to a larger number of people, this certainly will pinch. Radhika Rao, the economist, is here with me in the studio. Let me get you in on this. How much elbow room really does the government have? If I remember right, every economist was saying that this government has overestimated taxes and underestimated expenses. So what is the elbow room to cut excise duties?
Thanks, Latha, for having me over. To put forth my frankest opinion is that the elbow room is not too much. Precisely so. The revenues have been overestimated in the extent that we are pinning a lot of hope on GST, that it will shore up the tax revenues, and we are pinning on the fact that fuel prices will not go up, rupee will be stable, and hence we'll have a concomitant expect. But these things have obviously gone in reverse. Now, to your point on what would the government do, I think the cost of not doing anything at this point would be higher, given the political challenges underway. We are 12 months away from the general elections, and the state elections happened before that. So I think there would be a small, modest cut. It will entail some fiscal costs. I think 1 or 2 rupees would already be about 0.1, 0.2% of GDP. But then again, I think the way to make that up is to probably trim a bit of the capital expenditure and also probably rake in more of GST revenues. But there is very limited elbow room. So it has to be, it will entail a fiscal cost which the government will have to bear, not only on the fiscal fuel excise duties, but also on the subsidy front. That has come down sharply in the past 4-5 years. I think the move to increase taxes is a good one, but truly this is the true test of fuel reforms. Such a situation where things are going against the momentum.
Okay. Well, actually, I think the government told us, the Expenditure Secretary did tell us that 1 rupee cut would mean a 13,000 crore hole in the government's kitty. And if this will either cut capex, which means growth is impacted, or if the subsidies, if the deficit itself goes up, it will hurt inflation. So either ways you lose.
Yeah, absolutely. I think this is certainly a very, very challenging situation. I think too many exogenous shocks have come at the same time. If you were to decide between growth and the fiscal prudence, I think some way fiscal prudence will have to give way. I don't think a move up from 3% to 3.5%, 3.7% in terms of deficit will be a big market mover. But I think the relief that the consumers require at this point to keep inflation and inflationary expectations in control will be certainly more important.
Oh, well, I don't know if all the bond dealers will agree with you. As it is, there's no one who's interested in buying Indian bonds, and yields have gone to 7.9 on the 10-year. So it's quite possible that if there is an announcement of higher fiscal deficit, it's all going to be well received. Well, let's get Vikas Halan of Moody's into the conversation. Because it's quite clear that the first line of defense is going to be the oil companies. Governments will demur, but it will be very easy to order the oil companies not to go ahead with their price hikes. A meeting is scheduled between the oil companies and the oil ministry sometime very soon. We had the BJP party president saying as much, tweeting as much. What do you think will be the impact? Do they have the margins to take a little bit of the pinch?
Yeah, hi, Latha. Thanks for having me. The oil marketing companies do not really have much of, elbow room to absorb too much of, price freeze, if you like. We have seen some companies in the region absorbing that price freeze, Indonesia being an example, where they have frozen the price until after the elections. And the state oil companies absorbing all the losses. But at the same time, the government is compensating the state oil company in kind by injecting assets free of cost. In case of India, these are listed companies, and the government has just sold HPCL at a very attractive valuation to ONGC. So it seems like on one side, the government is dealing on arm's length basis. On the other hand, to expect them to not increase prices, even if you bring back regulation on prices, which we do not expect in our base case, you would still need to compensate the oil marketing company. So, again, it will hit back the fiscal deficit side. So that doesn't seem like a solution to me. It's just, just another way of creating the same problem.
Okay. Well, I will come back to you on whether upstream oil companies will be the next who will be asked to take a little bit of the burden. But we have Thomas Isaac, the Finance Minister of Kerala, joining us. Mr. Thomas, we asked you this question again yesterday, but now oil companies today, since we last spoke to you, have further pushed up crude prices and petrol and diesel prices. And today, petrol is priced over 80 rupees in practically all Indian cities, except Delhi, where it is 77 rupees. Don't you think that state governments also ought to share in the burden a bit and cut their VAT?
That can be discussed. But the whole thing is a sham here. The basic issue is that central government has increased petrol excise by 300%. And, diesel tax by 300% and petrol by 200%. Now, when the prices were rising, oil prices were rising, they were always calibrating their excise duty in a manner upward so that the benefit of the decline in crude oil is not passed on to the consumers. Now the opposite trend is there, the crude oil prices are rising. They should do the reverse, and that's it.
No, I agree that they should do the reverse, sir. But look at...
That's it.
Yeah.
Let them do that, and we promise that we will never increase our rate, just as we haven't done for the last 4 years. We will suffer whatever reduction the tax revenue happens.
Mr. Thomas Isaac, I must tell you that Kerala has also raised the VAT on petrol, and at the moment I think it's standing at 32% or 34%. That's a tiny amount.
We haven't raised.
Okay.
Absolutely not.
No, but 34% is big enough, sir. 32, I believe. 32% is big enough, and 26% almost on diesel.
These rates, 24%, not 34%. Now, these rates are historically given.
No,
this
but
is not
no,
the rate
Mr. Thomas, no,
has been the rate that has been existing
yeah,
for
Mr.
so long.
Isaac, you know,
And therefore, we do not today think about reducing our tax rate. Only GST has made such a dent into our revenue.
but you're getting compensated, Mr. Isaac. Mr. Isaac, you're getting compensated. You're getting compensated on GST. That's not an argument.
That's what I'm saying. If central government is willing to take petrol into GST and agree to compensate the states, as in the case of other commodities, very well, let them put the proposal.
Well, you know, that is a distance away, since the GST does everything by consensus. That has to be done. But what about an intermediate solution? If you all have 32%...
Intermediate solution.
Let me just finish. Let me just finish, Mr. Thomas Isaac. You know, 32% when the price was 65 rupees is different from 32% when the price is 80 rupees. You are making more money. Surely you can give back something to your consumers. You are also an elected government.
Today, I have tweeted that in order to facilitate a powerful national level movement against the BJP's hike in the taxes on petroleum products, we can consider that. We can cap it as the percent. We will not take additional revenue. We will consider that. But this is to ensure, to facilitate, encourage a kind of protest movement nationwide to see that the central government holds back the tax hike.
Well, to be fair, sir, the protest has got to be against 31 governments. It has to be against 30 state governments and against one central government, since both sides are taxing the consumer, aren't you?
You are simply forgetting the simple fact that these 31 governments never raised the VAT rate the last 4 years. Kerala has most of it. In fact, if at all, they have only reduced the rate.
But even now it stands at an elevated 32% is my point. Things may have gone up and down, but 32% is not small.
Oh, then see, these are some things historically given. I didn't create this rate.
I agree.
But at the same time, now the central government, I mean, I haven't seen a government so insensitive to what the nation is saying.
Okay.
And therefore, to encourage the protest movement, in solidarity with the protest movement that might come, these states will negotiate to cap our additional revenue. And that we will discuss.
Okay. So in the next council, GST council, you all are willing to discuss that you all put a cap on your VAT. So
no need of GST council, we can discuss even outside.
Okay. So something is in the works, Mr. Something is in the works?
Places, they'll be discussing that.
Something is in the works? You all are going to be speaking to each other? Should we expect something soon?
Yeah, it should. I think all national parties should get together, regional parties get together, discuss on this. How can we get the BJP to roll back that hike they made in the tax rate?
Okay.
And now also consider the fact, in order to strengthen this movement, states take a united position to cap the additional revenue from the hike, the price, increase in the price.
Okay. So will the position be that BJP should, the NDA government should roll back a bit of its excise and the states will roll back commensurate a bit of the VAT? Will that be the understanding?
That's not the demand.
Okay.
The demand, let's say the BJP government should roll back the tax excise duty to the position that was when they came to power. That's the demand.
Okay.
That's the demand.
No, that's a tall
ask. And you
ask.
do that, the prices will tumble down to 60%.
And you, I see. So it's only going to be a unilateral demand. You are not looking at doing anything?
No, you see, because automatically, since we are ad valorem, our revenues are going to take a serious hit.
But sir, they have also increased now, is the point I'm trying to make. So why don't you all, both sides, agree to a little bit of a cut?
No, I don't accept that. We have never increased.
No, not increased, but because the price has gone up, your ad valorem goes up.
So just the reverse.
Okay.
You let the people who increase the prices bring it down.
Okay.
Our revenues will be hurt. We will never raise the tax rate to compensate for the decline in our revenue.
Okay.
Now I know the BJP is not going to do that. Therefore, we will think about a national level protest movement. And as part of this protest movement, we will take certain initiatives of our own.
Okay. Okay. All right, Mr. Thomas Isaac, we've got your message. Politically, the opposition parties and the state regional parties are going to ask the BJP or the NDA government to roll back the excise duty to the pre-NDA time, and not much is forthcoming at the moment in terms of a cut in duties. They expect the ad valorem returns they get to fall. Okay, we are actually running out of time. Very quickly, Radhika, what is the in-house view on crude and on dollar rupee? What are the two numbers we should look out for?
Sure. So for us in-house, we expect the crude prices to stabilize in the 70 to 75 range, predominantly because of whatever the geopolitical tensions that are building up. You've got Venezuela where things are, except oil, all the other industries seem to be facing sanctions. And then you've got Iran and the scope of Middle East tension. So that's a 70-75. And for the rupee, in the beginning of the year, we've off consensus expecting rupee to weaken. Our targets of 67 has been met. By year end, we expect rupee to be at 69.50. So it's going to be a weaker rupee and stable oil prices at these levels. With certainly some more pinch in terms of crude price movements.
Finally, Vikas Halan, a final question to you. How do you think the burden might be distributed between upstream companies and downstream companies? Do you think upstream will be given some burden, or do you think largely it's going to be the oil refineries who will be asked to bear a little bit of price freeze?
Yeah, our view is that the first line of defense is the government budget. Anything over and above that in terms of subsidy will be borne by the upstream companies because the government doesn't have too much of fiscal space. But the downstream, we don't expect them to bear any subsidy burden. We just they keep paying dividends to the government as they have been doing for the past couple of years.
Okay. All right. So expecting ONGC and Oil India perhaps to take the rap. Dr. Parekh, a final word from you. Why are you so resistant to the consumer taking a little bit of the burden? If the burden is passed on, then chances are they will use it more economically.
No, certainly I think, but there is a scope with this time, as was pointed out earlier, that we can relax the fiscal deficit target a little bit. As far as the subsidy on, say, LPG is concerned, for example, the government should clearly identify the relatively rich and reduce the subsidy on that account significantly. Just give it up is a small fraction of the people who really do not need or deserve the subsidy. So you could easily expand the scope for excluding people from LPG subsidy and get some money that way. The other way, I think, when a $20 increase in crude prices implies a 3 rupees increase in the revenue of state government when they have a 30% tax rate, VAT rate. So they could easily promise at least that we would adjust the tax rate so that our revenue remains stable. That would itself bring some relief to it. And the central government should take some burden on it. I think there is just no other way. In my opinion, putting burden on the oil companies would be a totally wrong thing to do. It will affect the sector, and the future ability to produce more domestic oil would also be affected.
Fair point. Well, that's the person who had actually advised on the administered regime going out and market-determined prices. That's Dr. Parekh, Mr. Saurabh Chandra, Vikas, Radhika Rao, and Mr. Thomas Isaac. If you're still listening, thank you very much for joining us in this conversation. My elite panel believes that everyone can take a little bit, but at the moment it doesn't look like the state governments are willing to take a cut. They are on the warpath, that's very clear. Thank you very much for watching the special edition of Crude Realities.